What's cracking, you guys? Welcome to the Mango Grove. My name is Krisha, and this is today's Bitcoin analysis video. Now, yes, we're seeing a meltdown on your lower time frames, on your intermediate time frames. Question is it over? Why did my screen refresh just now? I have no idea. But is it over? This entire bleed, guys, sponsored by the one and only Jerome Powell. Now, as far as is the bleed over is concerned, quite honestly, what I'm seeing on the chart is a pattern trader's wonderland. And as a pattern trader myself, this is telling me that the bleed is not over. In fact, the next major target that I am looking at to the downside comes in here. That's right. So I'm seeing a bit more of the meltdown according to price action. What is the move from where price is at right now to this entire zone? Let's take the lower threshold. That's another 10% to the downside. So today I'm going to tell you exactly what it is that I'm seeing on the chart that's going to drag us down another 10% on Bitcoin. Of course, guys, if you've been liking the content that Sean and I have been putting out, that like button goes a very, very long way, so please do smash the likes. And hey, if you want to keep up with the latest mango juice and you haven't already subscribed to the channel, please go ahead and hit the subscribe as well. That way I can see you in the next video. Now, that said, guys, I don't want you to get this twisted. My overarching view on Bitcoin is still bullish. But let's go back to our basics. If this is the cycle, this right here is the bull market phase. In the middle of this bull market, and if you zoom in to this price action right here, you're going to get a trend that looks like this, okay, which is a downtrend. Alrighty. Now, what those downtrends really present are better bid opportunities on the chart. All right. So as far as Bitcoin falling further is concerned, I am looking at that as discount buy opportunities. Okay. Now, of course, if this overarching trend changes, if this breaks, if something goes really, really wrong here, that's when I will change my stance. But for now, we're very far away from that happening. Okay. Now, I'll tell you what it is that I'm looking at on the chart. Now, a couple of days ago, Sean actually posted this on the Mango Discord chat. Let's go ahead and bring it up. He actually posted this rising channel formation. Okay, now a rising channel is a bearish pattern. Now, what I'm seeing on the chart, on Bitcoin's chart right now, is like a pattern trader's wonderland. I'm not sure if you guys are noticing that, but it is a pattern trader's wonderland wherein one pattern is triggering the other and the next pattern is triggering the other. So today I want to walk you through the cascading effect of all of these patterns, because of what this really gives us is targets to the downside, what to expect from here. So now he had posted this alpha for everyone on the 5th. So this is before the pattern even broke down. And as things unfolded, let's go ahead and draw out that pattern on our chart. That was primarily found on the 1 hour time frame for those of you who love playing the lower time frames. I think the lower time frames is where the better trades are at right now, considering that the higher time frames are in this very, very massive range of consolidation. I mean, to think that Bitcoin has been consolidating since Jan, right? So the pattern was this, okay, that he had highlighted for everyone in the chat. It was a rising channel, okay? But check this out. Check out the rising channel and how it sort of played out. Let's take the measurement of the rising channel, plot it on the break. And where did that take us down to? 28.2K. And did price get down there? And yes, it did. However, now that this trade has been exhausted, what is the next thing that this triggered on the chart? Well, check this out, okay? And this is why I mean that this is pattern trader's wonderland right here. All right. If you look at the 4 hour time frame, that break then cascaded on over to another bearish pattern, which is a bearish head and shoulders pattern. Okay. And this right here was the neckline of the pattern. A beautiful break right here at around 28.5K, a retest of your neckline and continuation to the downside. And what is the measured move of this pattern right here? Let's go ahead and plot that on the break. This would take Bitcoin all the way down to 27.5K. Now, we haven't gotten there just yet. We've gotten close enough, though. However, what if I told you that if price falls further down, and which, in my opinion, based on how this last 12-hour candle closed, we'll go over that in a second, based on that, this is telling me that Bitcoin wants to fall further. But if we get down to 27.5K, this then triggers another bigger bearish pattern, okay, which can be found on your 12-hour time frame. All right. And honestly, from experience, now we've been in the Bitcoin market for, quite a few cycles. And in my experience, you only see these cascading plays play out to the T in the beginning of a bull market. Basically, when there's low market participation. Okay, that's when these cascading patterns play out to the T, and when I say to the T, I'm looking at the measured move. So now as far as this head and shoulders pattern is concerned, the measured move would take Bitcoin all the way down to 27.5k, but getting down there will also trigger a bearish M-like formation. It's almost like that minor double top right there, right? And if you look at the neckline of this double top, it comes in right here at around 27.9k. Now, what is telling me that price honestly wants to get down here once again? It's how that freaking 12-hour closed, guys. Okay, check this out. If we're just looking at this picture where I've drawn in the neckline, okay, now of course, I'm doing this based on what I have learned in all of these years of trading through all of my lessons. That's how I mark out my necklines. That's how I mark out my measured moves, so on and so forth. However, if we're just looking at the candle closes, let's get rid of all of these nasty squigglies. Perfect. Now check this out. I want you to observe that last 12-hour close. So first of all, we took out the lowest point of this candle right here, which came in at around $27,666. This was $27,617. Okay, but in addition to that, let's take this neckline now and bring it up a tad bit. Okay, as far as horizontals are concerned. Check out how this closed relative to this entire range since April 25th. For the first time since April 25th, the 12-hour has actually closed a candle underneath that $28,000 region, which we had been holding as support. Okay, and that's why I'm saying that this right now looks like it wants to come down further. So now what we could end up seeing is price moving to the upside first, giving us a test of the breakdown point, and then a continuation to the downside, getting us all the way down to the measured move of that head and shoulders pattern, which I had highlighted for you right here, to 27.5k. But now remember, what is this trigger? This is going to trigger the M-like formation. Okay, and this is what makes the play so beautiful. It's one pattern cascading on over to the other, cascading on over to the other. But now if we break down from the M-like formation, that's what then will take us to that target that I'd highlighted for you at the beginning, right? Which is this 10% target right here, right? Because if I go ahead, take the measured move of the pattern, plot it on the break, where does this take Bitcoin down to? 25.9k. Okay, first stop 25.9k. Now, I received a lot of PMs over the past week asking me to chime in on this being a head and shoulders pattern. And guys, I'll be honest with you, okay? Very, very honest. I'm not confident that this is a bearish head and shoulders pattern. Okay, this could be another bearish pattern, breaks down perhaps, but I'm not going to call it a bearish head and shoulders pattern because I am not seeing the right volume profile on it. I use volume profile as my confirmation, and if I don't see the confirmation, I'm not going to be playing it to the measured move. Okay, yes, it could break down perhaps to another target, but I'm not going to be looking at it as a head and shoulders pattern. Because what I'm seeing here, I'll be very honest with you, okay? Here's my honest thoughts on this being a head and shoulders pattern. Yes, there are bearish notes. The entire structure, of course, if you're just looking at price action, is bearish. But I'm looking at the markup phases of this entire pattern, right? I'm seeing considerable buying, like decent buying volume relative to the selling volume that's coming in here, which is a bullish note. Okay, now, and that's why we're not even seeing the correct volume profile on this bearish head and shoulders pattern. And that's why I'm not going to be calling it. You need confirmation indicators with your patterns, because if you're just playing patterns, trust me, you're going to find patterns every freaking where. And if you do not know how to filter right patterns from wrong patterns, you're going to get yourself into trouble. So always try and find additional confirmations if you like pattern trading. Don't just rely on the pattern itself. You know, try and beef up your entire trade setup if you're looking to play the pattern. Now, as far as the M-like formation is concerned, as far as this small mini head and shoulders like pattern is concerned, this has the supporting volume profiles. This has the supporting confirmations on them. Now, did you guys need me to give you this entire trade setup? No, you did not. Why? Because now, if you're using the Mango dashboard, you guys have access to honestly the best bid feature there is out there, which is the FVGs. Right, the FVGs is the new fair value gap feature that we have on the dashboard, and it has literally given it to us on a freaking platter. In fact, I wish I had just followed this to the T and helped me sort of frame my biases in a way, because this highlighted the best bid opportunities and told us, hey, be patient, you might get this bid. Check this out on the 4-hour time frame. Okay, I remember seeing this. I was on the 4-hour time frame and I put on the bullish FVG, and we got the FVG right here, and we were sitting right here, right? We were sitting all the way on the top. I'm like, no, this looks like it wants to see continuation. As some of you guys can remember, one of my prior videos was bullish. I was looking for continuation over here, right? But what we ended up getting is a meltdown, getting into where? The FVG block. Now remember what the FVG block is. It's telling you that there is an imbalance in the market. Okay, there is a lot of trapped liquidity sitting there. Oftentimes, price gets pulled into these zones. They act as magnets. And once again, what do you know? Price got pulled right into it. Okay, so look at the FVGs, play the FVGs. Now, of course, I am also breaking it down in terms of price action, in terms of the pattern plays that I'm seeing. However, it is all aligning with the FVGs. So for those of you who have access to the FVGs, use them well, because you can frame a lot of amazing trade setups just based on the FVGs. Okay, now of course everyone can get premium access. There is a 3-day free trial, so go ahead and you can give the feature a whirl if you are not a part of the Mango dashboard just yet. So now just a quick recap of what we went over. We're looking at price falling another 10% to the downside to this zone right here. What triggers that pattern? This M-like formation. What triggers the M-like formation? Us essentially breaking the neckline of the M, of course, which comes in at around 27.9K. If you guys want to take down that number, please go ahead and do so. For those of you who have the FVGs, you have access to the levels on your chart. In fact, you have a higher time frame FVG lining up with the target as well. Okay, so go ahead and check that out. Now, this is the play. Okay, if we start closing candles, I say we trigger the M-like formation to the downside. When does this entire trade setup get negated, right? Well, let's reverse engineer this. What led to the breakdown of this? What was that breakdown point, that major breakdown point? Well, it was the breakdown of the head and shoulders pattern, right? That was the initiation of this melt. So guys, if we essentially undo that, okay, if price starts living over that breakdown point, which comes in at around 28.8K, so if we bounce and we break up over 28.8K, I'm saying this entire play has then been negated. Okay, keep it very, very simple. If you are looking for simplicity, especially to figure out, okay, is this play over? You know, is the trend reversing? Reverse engineer it, work backwards, try and figure out what was that breakdown point. Because if price gets back over the breakdown point, you know that something different is happening on the chart. There is a shift in order flow on your lower time frames. The buyers are overcoming the sellers on your lower time frames, and that is essentially what's going to shift order flow. Alrighty, now this is all I have for you for today. I actually had one additional thing I wanted to talk about, something that Julian posted in the Mango Grove chat, but because I want to keep this simple, because I do not want to overwhelm you guys, we're only going to be sticking to this cascading pattern play, and perhaps I can flesh out, a fractal almost that Julian found on Bitcoin's chart on the much, much, much higher time frames. So we'll be going over that in the next video, okay? Now with this, guys, make sure to smash that like button if you enjoyed today's video. And hey, if you're not already subscribed to the Mango channel and you want to keep up with this kind of analysis, well, what are you waiting for? Smash that subscribe, and I will see you in the next update. With this, trade safely, trade stress-free, trade the Mango way, trade the easy way. Ciao, you guys.